Hi everyone, welcome back to Be Rich. I have Anand and Shashwat with me. We're going to have an interesting conversation about a very favorite company of Anand, me, and my sister and my dad. And before we get into that, I just wanted to say our heartfelt condolences to what's happened in Kashmir to all the victims and their families. And it is a very sad situation what we're going through. It is very frightening where we are right now. And a lot of you are asking me to offer an opinion about this. I really am like you. I can't understand why this is happening over and over again to us, why we're not able to figure things out. And it really breaks my heart that innocent lives are lost because we're not able to find some common ground and build some bridge towards this. I do hope the government, the ones in opposition and in power, can work together and find some solution to this. Though it is very frightening what is being shared in the media and what is being said. Anand, do you have anything to offer in this?
My deepest condolences. More than 20 lives have been lost. This is not a time to talk about politics.
Correct. And
The wound is raw.
yeah,
A lot of people have suffered real losses. Over a period of time, we will find out what went wrong and fix accountability. In my considered opinion, nothing much is going to come by striking out with anger. Both sides have to show restraint and try to find the culprits and bring them to book.
correct. Well, that said, we are investors and we are not very astute in this kind of analysis. Anand, me and Shashwat are as good as you guys are. So we hope and we pray that we find a solution to this soon. That said, Shashwat had put up an article on Substack, which is very interesting. Those who have not read that article, please pause the video here, go read that article, then come back and watch the video so you understand the context of this video. It's a wonderful article. It's about a Japanese company. And without wasting any further time, I'll let Shashwat explain this article. Then Anand can offer his views on it and we can have a conversation. Yes, Shashwat.
Right. So thanks for having me again. So today is another edition of our company analysis. So the company's name is Sony. I'm sure a lot of you have heard of this company, maybe used its products. They make all sorts of products. And if you're into gaming like I am, you must have heard of the Sony's PlayStation and the games that come with it. And if you use a phone, you might have remembered Sony's Xperia. If you listen to music, of course, you must know about Sony's headphones. And believe it or not, Sony actually manufactures the cameras in a lot of the phones that we still use today.
Yes,
So,
it's true.
given all of these products which they manufacture and how enmeshed they are into our modern lives, I figured that this would be a company that I pick apart and look at for the sake of this company analysis series. Now, Sony is a company that was established in 1946. And it actually started off as an electronics distributionary company. It was basically an electronics store in Japan. And then they started producing their own electronics, where you had the first tape recorder ever produced in Japan commercially was by the Sony group. And then they also produced the transistor radio, which they very soon started exporting during the Japanese export boom. So post World War II, when America came in and stepped in and reformed Japan and the Japanese economy, you basically saw that Japan became a big exporting nation. So those of you like how my uncles lived through the 80s and the 90s, they must remember using a lot of Japanese products. And one such company, which was a giant of exporting technology back then, was Sony. So this is a company more from their generation, but the fact is Sony is still thriving today, and it's a company of my generation as well. So, which is why I figured that this would be a generation bridging company that we could pick up for this series. Now, let me run the facts through both of you, and then let's get into the valuation side of things. So, first of all, Sony's PE ratio today is trading at 19.8. Its dividend yield is 0.5%. So, compared to our other picks on this channel, the valuation is a bit higher in the sense that Subaru is trading at a PE ratio of 4.5. And however, Nike is still trading at 21.5. So, it's still relatively undervalued compared to Nike. But the point is, for a Japanese company, Sony's price to earnings is on the higher side of things. Now, given an earnings price to earnings of 19.8, and the dividend yield of 0.5%, it's important to look at the fundamentals of the company. So let me talk about the fundamentals of the company. Sony has 5 major divisions. But the main divisions we should focus on is the gaming and networking services aspect, as well as the technology production wing of Sony, because these are the two main revenue generating machines for Sony. Apart from these two revenue generating machines, which account for 50% in total of the revenue, there's also the financial division. A lot of people don't know this, but Sony actually has a financial division where they supply life insurance services and other financial services, miscellaneous financial services. So
Only in Japan.
Only in Japan. So this is something Sony does, and Sony also builds high quality sensors, which is actually used in all sorts of products which uses optics. So when you have telescopes, Sony actually produces sensors which are sometimes used in high-end telescopes, and you have Sony sensors used in all sorts of machinery.
Yeah, those are high margin, high value products.
Yeah, high margin, high value products. So Sony is actually into a lot of things. But if we look at the main wing that's going to generate the huge growth that Sony has seen in the past, today it seems to be the gaming and entertainment services which they're doing, because they've acquired some. For those of you who watch Japanese animation, it's called anime in short, but there's a big service provider called Crunchyroll who actually streams a lot of Japanese animations.
Yes.
And Sony, before... Big fan, yeah. And Sony has been so silent in their strategy that it's not been on the news at all. But Sony actually acquired Crunchyroll in 2020. This is like as if Netflix coming in and acquiring Hotstar in India. It's huge, and it's something which was basically very stealthy. No one knew that Sony did this. And there's another company called Bungie, which is a gaming development organization, which has produced Destiny, and it has produced a lot of Halo, which was also something which the Bungie studio produced. And Sony has purchased Bungie as well. So Sony's made a lot of acquisitions, not just these two, but these two are some of the biggest that went unnoticed. And which is why Sony's numbers also make sense. So when we look at Sony's numbers, their short-term investments and cash equivalents are about $15 billion, and their total debt is about $24 billion today. So off the bat, we can see that Sony's debt is higher than what their short-term holdings are in terms of cash and cash equivalents. However, if you look at their free cash flow, their latest free cash flow TTM is $19.8 billion, which they've generated. So if you add the 19.8 plus the 15, there's more than enough money for Sony to pay off their total debt. And even if they didn't touch their cash position, Sony can pay off their total debt in a matter of 1.5 years. They can pay off their entire debt. And which is why credit rating agencies consistently have given Sony an AA rating in Japan, A- by Fitch, and even S&P has given it a very high rating. So the point is, Sony has actually gone up in credit ratings in recent years because they've pursued a strategy of doing stock buybacks with the free cash flow that they've had. They've been acquiring heavily in the entertainment division. They want to do more streaming. If you look at India, they have something known as Sony Live. They recently acquired the rights to streaming some sports games as well. So Sony is doing quite well in that division, and they believe that is going to be their next source of growth. Something important which I haven't mentioned so far is Sony also has something for its music division. So a lot of you who are following, Western music might know of this artist known as Beyonce, who recently won a Grammy or something to that effect for her album. And she's actually signed to Sony Music Group. This is something which I didn't know before I started the analysis for Sony. So Sony has a lot of up-and-coming artists as well as established artists working with the company. So given all of this, I believe that Sony still has a lot of earning power to going forward. And the fact of the matter is also that because Sony, like a lot of their revenue comes from services and service provision, I believe that Trump's tariffs do not impact Sony as much as other, manufacturers like Subaru or, someone who produces cars, for example, who have a 25% tariff slapped on them. So given that, I believe that Sony's earnings are going to be a bit more resilient in the upcoming few years. And if you look at their free cash flow, it's compounded by an average of 10% year on year over the past 10 years. This is including the drawdown on their free cash flow, which has happened because they've been investing in acquisitions. They've been drawing down their free cash flow because they've also been doing stock buybacks, and they've been drawing down their free cash flow because COVID happened. And COVID was a huge drawdown on their free cash flow because the fact is they weren't making a lot of money which they otherwise would have been making. So given all these factors and the fact that their earnings have still been quite resilient, I believe that the fundamentals look good. Before I continue on to the valuations, I want to hear your thoughts on what you think about Sony and its fundamentals.
Sony is a company which started as a hardware manufacturer.
Yeah.
So they were the first ones to use transistors to make radios. They dominated television, they dominated hardware on the music. And then they pivoted. And when they pivoted, they bought Columbia Pictures. That was their first pivot. And from then on, they have been pivoting away from hardware manufacturing. In fact, you can mirror it with the rise of Intel and Microsoft and
The other tech giants.
Other tech giants. Sony vacated that space and Sony went into software. Basically, software is basically streaming and making movies and music, movies, anime and games, which was not that did not make Sony what it is today. It was Walkman and the Discman, the Betamax and the televisions that made Sony what it is. But Sony knew where its advantage was, and it knew it couldn't compete with America on chips.
So it pivoted.
It pivoted, and it pivoted very successfully, unlike other Japanese companies, and became an entertainment player. So Sony has one of the biggest libraries, and very surprisingly, they vacated the cell phone and the laptop. Vaio was a very successful laptop. They moved away from that, and they moved away from the phone and saw that niche camera manufacturing area where the Japanese were very strong, where they have a big name, Nikon, and they had Olympus, they had
Fujifilm.
Canon, Fujifilm, and they got into that. They dominate that section, especially on the semiconductor side. And most of Apple's lenses are all Sony lenses. So Sony became a OEM player in optics. And Sony, like you correctly pointed out, has a big anime streaming business.
Yes.
It has a huge library of Indian music, Indian songs, as well as Western music songs. And Sony has been a very powerful TV brand in India. Sony Live. It was a television company, but they are very careful with the acquisitions. They tried to acquire Z here, but when it fell, when they couldn't get along with the promoters and felt it could be a problem, they dropped Z. And they don't believe in going overboard for sports rights.
Yeah.
They have tried every time to participate in Indian cricket rights and international cricket rights, and they have dropped it. They have not gone for it. They have not paid the top dollar, which Disney and Jio paid.
Yeah, Reliance.
Okay. And instead they go to offbeat countries and buy their rights.
That's a good point, because when I wanted to watch Premier League football, I watched it through Sony.
Yeah.
In India.
Yeah.
Yes.
So they buy offbeat. Their investments are low, the returns are very high, and it's a very profitable business.
Yeah.
Some obscure country will have Sony as its cricket rights. So when India goes to that country, you will have to watch it through Sony. So Sony is very defensive company and has done extremely well. And like Toyota or like all Japanese companies, they have a huge borrowing because their interest rates are very low. Even today, their interest rates are very low.
Yes. Their weighted average cost of capital is 3%.
Yeah, so it may go up by 0.5%. That's it.
The return on invested capital is 10.5%.
So it makes more sense to have debt than equity when such a large gap is there.
Yes.
And this is why they have not bought down their debt. Instead, bought back shares to bring down equity. And since the cost of capital is so low, they still have the ability to buy and buy back stocks. And this is one of the reasons why Buffett issues Japanese bonds and buys Japanese stocks.
Yes.
So we have seen this in the case of Toyota, and we have seen this in case of Sony. So it is a company which I am very sentimental about, of course.
Yeah.
There was an ad, it's a Sony. Sony dropped off the radar because they are no more making televisions, they are not making laptops, they are not making phones. They are not in the hardware space at all.
Yeah.
If you had asked me...
That is consumer-facing hardware space.
Yes, they have consumer-facing hardware space, which was once dominated by Sony. They have just ceded it to Apple.
Yeah.
but have stuck to software, and that's where the money is. And streaming rights and libraries, that's where the money is.
I think so you can correct me if I'm wrong, but I think one of the reasons the return on invested capital has stayed high is because they moved to high margin areas.
Because even in PlayStation and Microsoft's Xbox,
Yeah.
you have to subsidize the hardware for them to buy the
Yes,
games.
exactly. They take a cut of every game that is sold.
And like that Nintendo manufactures hardware which is 2 generations down below.
Yes.
Not the cutting edge.
Not the cutting edge.
But they own the characters and they own the
IP.
They own the IP. That's how they make money.
Yeah.
So I think for a period of time, Sony will go down the same path.
Right. So let's move to the valuation side of things. So when we did the discounted cash flow for Sony, we made the assumptions that we took a 10-year period, of course, because long-term investing is the point of this channel. And when we took a 10-year period, we compounded the free cash flow by minus 3% for the first 3 years, because we believe that tariff pressure and global economic sentiments don't look so great. So we believe that, okay, let's take a conservative estimate of minus 3% year on year for the first 3 years. And then the 7 years after, that is following the first 3 years, I took an estimate of 5%. Is that reasonable?
Very reasonable, very conservative.
Right. So I took that. Then I took a discount rate of 10%, which is far higher than their weighted average cost of capital. But I still took it to have a margin of safety, like Ben Graham says. And I took that terminal growth to be 3%, which roughly tracks the US GDP growth. And finally, we did the discounted cash flow analysis. I kept the share count constant, but I want you to know that Sony has been reducing their share count by
1%. 1%. And not only that, you have been extremely conservative in the assumptions.
Yes. So I want the viewers to know that this is a conservative estimate, hopefully. And what we end up getting as the net present value of the cash flows per share is $42. And Sony, as of speaking, right now, it's trading at $24.8. So there's about a 60 to 70% margin of safety involved. So what do you think? Is this something that we should consider, or is this something that we should wait and watch?
No, I think we should take a punt on Sony.
Okay. And
there are stocks cheaper than Sony, no doubt.
Yes.
Which we take punt on.
Yeah.
But for me, Sony is a great Japanese brand which has survived.
Yeah.
I would have liked Sanyo to survive like this. It's not.
But what do you think about their competition with Netflix and other streaming providers? And
no, it's very funny. Actually, Sony should have been competing with Apple, but is instead competing with Netflix and Amazon.
Yeah.
Yes, but I think they are very low key.
Yeah.
They will wait for Reliance Jio to drop some marquee products.
Yeah.
And keep picking them up.
Right. Your opinion on Sony's? No, but what do you?
I'll tell you what.
Yeah.
I have a fundamental problem with Sony.
Okay.
The problem with Sony is they historically have one major issue internally with the company, and it's part of their DNA, which is always what gets them into trouble. Sony always tends to over-engineer things.
Okay.
The why reason Apple has beaten them hollow, like Anand says, is Apple knows when the product is ready to hit the consumer. Sony holds back and says, let me reinvent the wheel. They did this with Betamax. They did it with the mini CDs, right? They did not see from CD we were transitioning to MP3 players.
Yeah.
They missed that boat. They missed the boat with the Betamax.
Yeah.
VHS was lower quality. Betamax is much superior quality. But it being a Japanese cultural thing that they want to do the best. If it's not the best, they rather not do it.
Right.
They have that attitude. And they had the same problem with Sony PlayStation 3. When the launch was Sony PlayStation 3. And they've done this many times, where they tend to over-engineer something when it doesn't require, especially when it's a consumer-facing product. You're true. When you're making a sensor for a telescope, when you're doing something which is very
cutting edge, it
requires,
Yeah.
and those are high margin.
Yeah.
But in terms of what it's facing consumers, I don't need an over-engineered mug, or I don't need an over-engineered watch.
Yeah.
And that's the same reason why Sony struggled with laptops. They were over-engineering it. They struggled with Sony Ericsson phones. And that's the same reason they're still Sony phones, believe it or not.
Oh.
They still manufacture Sony phones, which are heavily over-engineered and packed with so much of features which no one will use.
The consumer doesn't
Yeah,
appreciate.
the market share for their phone is so minuscule because the market size for that phone is so minuscule. They're sitting and making a phone which is like a camera, which is such like a high-end alpha camera of theirs, but dumping it inside a phone which is meant to be a consumer product, and they're pricing it so high. So they have this tendency of doing this. So yes, you're discounting cash flow, everything is right, but seeing it from the flip side,
Yeah.
there is fundamentally an issue with them, and they've made many mistakes in their history. But the main reason they're able to escape is, like you said, they have cash
Yes.
and they have access to very cheap cash,
Yeah.
which has helped them. And I do not know about the current management and their style. But looking at Japanese companies, they tend to sit there forever.
Yeah.
If you see the top brass, there'll be generation guys sitting there who are, and Japanese tend to live till the age of 90,
So the
80,
yeah.
and they don't have any like forced retirement at the age of 60. And young guys, flush blood, trying to creep into that management is
Yeah.
very difficult in a Japanese company.
Yeah.
So I don't know if you had to bet at this price. Yes, it looks cheap at 21 or 20 or 18, 19, whatever you said. I would like say, play devil's advocate, a Subaru or some other company may be a safer bet. I love Sony. There's nothing wrong with Sony.
Yeah,
Anand
fair
and me, we both love Sony. We'd do anything for Sony.
Yeah.
But is it the price to enter Sony is something you guys have to decide. This is my argument. The being devil's advocate.
Fair enough.
So anyway, we have given you a taste of what is there in the article. I don't want to dive too much into the depths of the article in terms of value and analysis. I want you to go read it. So go to Substack, please subscribe, support Shashwat and his team who are doing all this hard work to get this kind of analysis out for you. Especially you viewers who have been craving for some US and Japanese information. It is a fantastic article. I would love you to read it and reach out to Shashwat or me or Anand and tell us what you think about it. Are you agreement with Anand or are you agreement with Shashwat? Or do you think what I'm saying makes more sense? I'm curious to know what you think. So read that article and come back and let us know. Anything else you want to add, Shashwat? I don't want to give too much information. I want them to go leave enough meat on the bone, as they say.
No,
Thank you for watching, Birich. I hope you liked the presentation. Kindly do support the channel and subscribe to it. Send this video to your friends and relatives and have them take a look.
Thank you.
Thank you.